Hello, welcome to the TaxShredder Podcast, where we turn your tax headaches into wealth-building wins for 2025. My name is Graham. I'm a fully qualified senior accountant, and I've run a practice for many years. I'm also an entrepreneur, and I see the world through entrepreneurial eyes. So therefore, I'm not a bureaucrat, and I'm not a corporate geek. I'm an entrepreneur, first and foremost. Today, we're going to speak about the HMRC tax crackdown, and particularly the HMRC crypto tax crackdown, which is something that has flown under the radar. Yes, people have spoken about it, and people have said, oh, it's coming, in some ways a good thing, in some ways a bad thing. But they haven't really said, okay, this is the problem. What is the solution? And this is what we're going to tackle in these podcasts, in this new channel. And this is the first TaxShredder podcast. We are going to tackle issues like crypto tax, normal tax, financial affairs, business, politics, as it relates to business and entrepreneurship, with the underlying thesis that we can use modern technologies not only comply with the law, but simplify it in order to create great wealth in rapid time in a manner that's easy to implement and practical for you to understand. Today's topic, HMRC's crypto tax crackdown, is something that anybody in crypto in the UK will need to tackle and will need to be proactive about. If you're not proactive and you have gains of more than £1,000 in total in crypto, then you may end up facing penalties more than the gains that you've actually made. And you could also end up being criminalized as well. HMRC is in a very aggressive mood, and the government has given it tools beyond anything it ever had before and beyond anything that's imaginable to really go after people it believes that may have not complied with the law. And the thing about HMRC is that even though you may have complied, if they get it for some reason that they believe that you haven't, for whatever reason, they're like bounty hunters. It seems that they incentivize to really get something on you and come back with a scalp. And that means the stress of it. I've seen people going through tax investigation stress. And believe me, it's unlike any other stress you've ever been through in your entire life. There are many people who have been brave before the fact, it's nothing. But the minute that it starts, they crumble like sissies. They become jello. Their life falls apart. I don't want that to be you. Remember, HMRC has unlimited resources. So given the powers they have now and the technology they have at their disposal, you don't want to mess with those guys. But what you want to do, you want to simplify the rules in a manner that not allows you to be compliant and they say leave you alone, but in a manner that helps you to save tax, be more efficient, be lazy, and create great wealth. It seems too good to be true. It's not. And the hacks I'm going to show you today are so simple, you think, oh, they're common sense. But like everything in life, why didn't I think about that before? That's what you say to yourself. But that's life. I will make these programs very simple, very practical, easy for you to follow, so obvious you think that you could have thought of them yourselves. But knowing the rules and being able to find solutions is a key to a good tax advisor, business advisor, and wealth creator. Let's get into it. HMRC crypto tax crackdown. Currently in the UK, as per 2024 figures, it's estimated there were at least 4.5 million crypto users, whether investors, traders of some kind. But 4.5 million is a lot. I think they think about, a great percentage of sole traders have some crypto aspect, people doing self-assessment. The problem is that they believe a lot of those people are not declaring it. And they're blaming the crypto community for the tax gap. The tax gap is the amount of money the government believes it should collect to fund public services and the amount that is actually collected. And in 2024, they believe that was close to 47 billion pounds, 46.8 to be exact. It's a lot of money. And they point the figure squarely at the crypto community. Why? Well, goodness knows why. I mean, the reputation that, many of us, the reason why we never got into crypto in the early days, like 2017, 2013, even though I knew about it quite a lot. I investigated the blockchain, I analyzed it, I researched it, but I was scared to get into it because of the reputation that had been pushed out from traditional finance and government bodies that it was associated with the Silk Road and with criminality. And many of us didn't want anything. You saw people going to jail. No. It seemed to be so underworld. Well, traditional finance was scared of crypto. And it turns out, they're the biggest holders of Bitcoin now. So how hypocritical is that? But however, that being the case, there is still this reputation of crypto in official sources that is linked with crime and people who evade tax. Now, there's no question that some people use crypto for bad reasons. But the whole community has been stigmatized, even though crypto is the future of currency. It's quite clear that it is. And anybody who doesn't realize that it is, in terms of Bitcoin, is really having their head in the sand. But, official and governments, they're like tankers. It's very hard to get them to turn around and see things. And right now, there's regulation. This is good. 2025 brought in, we know what the regulation is, but some of these regulations are so onerous on the crypto community. And the enforcement given to HMRC, the enforcement capabilities given to HMRC by this current government is so extraordinary that it's something like we've never seen in the UK before. HMRC can go into people's bank accounts and see what they have and compare it with what they're declaring and their lifestyle. They call it a lifestyle test. And, people get in trouble and HMRC go and take money as it deems that if you've underpaid tax. They don't need to go to an authority to do it. It's very scary. And this will come into effect, I think, in October. I don't think it's yet into effect, this this ability to just go into people's bank accounts, but it's coming. And once they can do that, they can match crypto, people on exchanges and all that sort of thing. So compliance is key. But being compliant doesn't mean that you're going to get shafted. If you're compliant in a smart way, in a fully legal way, like with everything else, if you have a skilled advisor, or if you do it in a skillful, smart, easy to understand, and simple to implement way, you will not only be fully compliant, they'll leave you alone, you'll save a lot of money, and you'll set the platform for great wealth. And it's like everything else, slow at first, and all of a sudden, that's the way wealth happens. You've got to build a foundation. So that's the key. Now, I have to read this disclaimer because, like with all videos, you have to make it clear that I am not your personal tax advisor. I may be a practicing accountant, but I am not your personal tax advisor. So this is just general advice. This is some guy just giving his opinions. You can follow it or not. I'm not your accountant. This is general tax info for 2025, not personalized advice. Consult a tax pro per HMRC and ACCA guidelines. That's my regulatory body. Data shared with us follows GDPR and ICO 2025 rules. Let's get to it. So let's start by laying the context. I'm going to give you some examples, some precise examples. So I'll be reading those examples because they're very precise. I don't like vague examples. I need to give you a real practical example that you can relate to it, that will be real for you rather than just abstract, and academic. And I will give you some solutions. And those solutions are very obvious, very simple. You'll think, wait a minute, this is too easy. Well, sometimes the best solutions are easy and are simple and are obvious. That's the way life works sometimes. Okay, let's break down the crypto tax crackdown and the tax rates. I already told you, I've already given you some general context about the tax gap, the number of users, how they're going to track our wallets, etc. Let's go a little more deeply into this without getting lost in it, so we can take it forward, discuss the rules, and give you an example with the solution. So there is a 46.8 billion, or 46.8 billion pound tax gap identified in 2024, and they pointed the finger at crypto because they think crypto community are a bunch of criminals. That's, what can you do? Geriatric generation. Yeah, and not only the geriatric generation, I don't want to be insulting. Please forgive me. I apologize. I didn't mean it in an offensive way. I take it back. What I meant was that establishment mindset, conformity, inability to accept disruption. And when people are that way, the system, the mindset is conformity. You see anything that's different as illegal or dangerous, and they want to destroy it. So they want to take your money. Okay. So 4.5 million crypto users, probably 5-6 million in reality. There's a lot more now. The new Finance Act 2025 mandates that in order to operate in the UK, a crypto exchange must be authorized. Otherwise, it's operating illegally. And the government will go after them. And in order to be authorized, there are many conditions that they must accept and they must comply with. For example, people like Kraken, Coinbase, Crypto.com, people like that, they have to, by law, the Finance Act 2025, transfer all of the data of everybody on their platform to the government. Everything. Anything you do on their platform will be transferred to the government. So the government will know in advance whether or not you're liable to tax. They will send every single sell, buy, leverage trade, everything. Okay. And then you'll say, well, I'll use a decentralized exchange, I'll mask my location, I'll put it in UAE. These guys are wise to that. They're wise to that. They have the expertise, they have limitless funds. The net is closing in. So all those people that tell you trade in this exchange, no KYC, those people could afford to get away with that, have very deep pockets. They can live in UAE forever. Just to jump through those loopholes year after year after year will become increasingly difficult. And one thing I must warn you is that HMRC can go back 20 years into your life. Goodness knows what they'll find. All they need is to break your accounts within 12 months of submission, your last accounts within 12 months of you submitting it. When you submit those accounts and the system, the HMRC, bring it back a calculation, it doesn't mean they accept it. It's just a computer system. It has to go through the whole system for 12 months. Only after 12 months from the date of submission are you free and clear. Only 12 months. And if you're a crypto user and you're too clever and you not declared some transactions and some DEX or whatever, and you submitted or not submitted, and they find out, And increasingly, as time goes on, they will find out. You'll be in a whole lot of trouble. They have 12 months. So don't, and then they can go back. If the 1 year is wrong, they'll assume the year before was wrong. They'll check the year before. If that was wrong, they'll assume the year before that was wrong. They'll go back. They could go back 20 years, as long as it takes. You have to be aware of that. Don't keep your head in the sand. Crypto could just be the entry point for them to destroy your life. Honestly. So you need to take this very seriously. And so not only do all cryptos doing business in the UK legally have to pass on that data to HMRC, HMRC is also aligning with the OECD, because the OECD is planning on a global crypto register. It's the same way they did for tax havens when people thought that you could put their money in offshore bank accounts and nobody ever find out. Well, guess what? There are very few offshore tax havens now that can keep the money, that can keep people's names secrets because of international pressure. And no nation wants to be ostracized because that has financial implications, sanctions, whatever. You'll do the same for crypto. So it's better to be forewarned, to understand the system, and try and use that to your advantage. Do not put your head in the sand, because they will not tell you, hey, we're looking at you. They'll just come for you. So it's very serious. The tax rules are, the basic rate tax, people are charged at the basic rate when they have income under, total income under 50,270. Crypto is taxed at 18% under the capital gains tax rules. There was a time crypto was seen as gambling income. It wasn't taxed. Those were wonderful days. I was in crypto then. But it's taxed at 18% now under capital gain tax rules. Above 50,270, it's taxed at 24%. Now, it doesn't mean that your crypto earnings must be above 50,270 for it to be taxed. Your crypto profits for it to be taxed 24. No. It means all your income, of which crypto is the top slice, right? So some of it may be taxed at 18% on a 10,000, 5,000, 80%, and 5,000, 24%. So we have to be mindful of that. One thing I forgot to mention is that in 23-24, HMRC penalized more than 14,000 crypto users in the UK. That's in 2024, when they hadn't taken it very seriously yet. Now they have more power. Now they're taking it very seriously. Now they're particularly coming after crypto because they blame crypto users for that tax gap. Can you imagine how many more they will come for? As for me, I made a big loss in 24. It was my first year in crypto because I was scared of going in before. And it's been quite painful. And a lot of people made a lot of losses, and we'll discuss that. So even though you've made a loss, you still need to listen to this podcast, because if you don't, and you don't utilize your loss properly, you'll be throwing money away. And you'll open yourself to future taxation when you actually don't need to pay the tax because you have a loss. So this applies to you too. And more than ever, if you've made crypto losses. That's free money. And I'll show you how later on. So the basic tax rate is 18%. The higher tax rate is 24%. There's a £3,000 exemption for the first £3,000 of your profits. So if your profits are 10,000, you'll only be taxed on 7. Standard capital gains stuff. Let's see. So if you're a company, you will be taxed. If you're trading as a business, you'll be taxed at 45%. Well, let's not worry about that now, because this really only applies to people like exchanges, and it'll be income tax. It won't be capital gains tax. It'll be income tax. and agents, people who trade on behalf of other people. So if you're an agent who's trading on behalf of other people, like in Bitcoin or altcoins or meme coins or all of them, you will be taxed at 45%. But for most people who do their own leverage trading or investing, whatever, that does not apply to you. You're okay. The thing that I want to bring your attention to, particularly for those of you who believe that you do not need to comply, and those of you who have bought into the deal that, I'll just use exchanges operating outside the UK, that you don't have to do KYC, that, that's being pushed continuously by a lot of crypto influencers, which I think is extraordinarily dangerous and will get people into a lot of trouble in the years to come. And I think it's very irresponsible of those influencers who do that. And I can tell you, if this podcast becomes popular, I will never be affiliate to those exchanges that promote no KYC. Simply because as HMRC gets better, and it's getting better very rapidly, these people, if you're one of them, you're offering an illusion that you cannot be caught. And if you do get caught, and many of you will, because you'll not be living year round in Dubai as a tax exile, and it's very expensive to move abroad, Singapore and all these places. You need £1 million to go to Malta for take up residency. If you've got £1 million to pay for Maltese citizenship or Switzerland or whatever, oh, fine, great. Or prepared to live in Georgia, that's fine. Otherwise, if you're in the UK, in Europe, even in the States, these people are all coordinating. The penalties in the UK, and I'll read this for you, up to 100% of unpaid tax for deliberate non-compliance, plus interest, at the HMRC rate, which is currently 3.25%. 100% for unpaid tax for deliberate non-compliance. Now, who determines what's deliberate and what's not deliberate? It's like, who determines what's tax avoidance and what's tax evasion? There was a time that tax avoidance was perfectly legal, and a lot of tax advisors, when I was studying, say, there's tax avoidance, tax evasion, tax avoidance, okay. Tax evasion, no. Then the two are now conflated, and tax avoidance equals tax evasion. There's hardly any difference between the two now, or the penalties you will suffer. So the question is, who determines whether the unpaid tax, the undeclared crypto gains, is deliberate or genuine mistake? It's the person investigating you. They will determine that. And from what I see, I could be wrong, HMRC investigators are incentivized to be bounty hunters. They have unlimited fun, and they train to go after you. They may sound kind, they may sound gentle, but it's like boiling the frog slowly, if you're familiar with that concept. How do you boil a frog? You boil it slowly. Put in cold water, it's comfortable. By the time you realize being boiled alive, it's too late. Just remember that. Be proactive. Be compliant. Being compliant equals savings, peace of mind. Be smart equals being compliant and saving money in tax in general, and especially in crypto. So here's a use case for you. I like the precise use cases to give people a practical understanding, not abstract academic, to put into a real life situation. And I'll give you a few of these as we go along in this short podcast. Picture Jake, a Manchester freelancer. He makes $20,000 in crypto gains in 25-26 tax year. That's from April 25 to March 26. So to be precise, from 6 April 25 to 5th of April 2026. But generally for shorthand, people say April, from April 1st to March 31st. But if you want to be pedantic, Picture Jake, a Manchester freelancer. He makes 20K in crypto gains in 25, 26. Without records, if he did not have records, he's hit with not only the CGT tax bill of 24% of 17,000 after 3,000 exemption. We assume he's in the high rate band. Plus an £816 penalty. Let's say it's 20%. They think that he made a genuine mistake. I mean, why? Why? It was so unnecessary. That's almost £1,000. So we have to use the rules to save money, be safe, be compliant, get HMRC out of our back. They know we're being compliant. They leave us alone, and we go forward. Jake could have avoided that unnecessary penalty. Now, remember I said without proper records. Keep that in mind. That is probably the most important thing in the current environment you will ever have to do, is to keep proper records. Always remember that. It is about proper records. Let's look at some tax and regulatory hacks. And I call them hacks because they're so obvious. But a lot of people don't use them. It may be obvious to me, maybe it's not obvious to you. It probably will be obvious to you. But using those hacks, and they are hacks, as obvious as they are, they will really set you on the right path to really enjoying crypto and having a peace of mind so that when you make those profits, you will enjoy the bulk of them. It's coming. I'm going to read this. Here are 3 compliant, no BS hacks to shred crypto tax stress and maximize wealth this tax year. All HMRC approved, all ACCA compliant, which is my regulatory body, is perfect for freelancers, SMEs, and crypto hustlers. Hack 1, nail CGT reporting. Keep proper records. And what I mean by that, buy, sell prices, dates, and fees. Now, okay, for some people, they're familiar with capital gains rules, they work in the city, they're familiar with same-day trading and bed and breakfasting. And if you're that way and you want to do it manually and you want to save some money and you're okay for spreadsheet, by all means, do it manually. It's not for me. I find it's a pain in the you-know-what. And, capital gains tax rules are not exactly the simplest in the world. But, if you want to do it manually, you have your spreadsheet, you have those columns, buy, sell prices, dates, fees. You track every trade that way. You match your trades. So you have to match your trades, same-day trading of the same currency, obviously not different currencies. And bed and breakfast, that's a 30-day rule. I will not go into a deep explanation of it because that's a whole lecture in of itself. But, you can look that up. As we said, the rules are £3,000 exempt, 18% low rate, 24% higher rate. I'll give you an example, a precise example that I'll read out now. Sarah, a London crypto trader, earns 60,000 freelancing, so she's obviously a high rate payer, and 10,000 in Bitcoin gains. After a £3,000 exemption, her 7,000 taxable gain is taxed at 24%. That's 1,680. Since her income exceeds 50,270. Track and trace saves her a £336 penalty. That's the importance of track and trace. I mean, if your gain is only, why pay 20% more on your taxes? I mean, that could be a nice little holiday. Why? Save some money. Right. Tool 2. No, hack 2. Excuse me. This is something that keeping proper records will really help you to identify. If you make, in all your crypto transactions, maybe you're just doing things part-time here and there, in small amounts, your total crypto profits, the difference between the cost of your buying crypto and the cost of your selling crypto for 2025, 26, April to March, is less than £1,000 for the entire year, you don't even have to tell HMRC. You don't. It doesn't matter. It's not their business. All you have to do is keep proper records in case they ask you, because they'll see your name on the blockchain and they might say, this guy didn't report crypto. Let's see. Let's see. They might contact you and you say, look, these are my records. Keep proper records. Okay. So is the common theme keeping proper records. Hack number 3, and this is where if you made a loss and you think, Graham, I've been listening to you for like 8-9 minutes. You're talking about you made a profit for the last year and a half in crypto. I mean, unless you have Bitcoin, everybody's been crying, making a loss. Some people lost their shirt. Some people lost their house. Some people are in debt because of crypto. And you tell me about profits. I mean, how is this relevant to me? Well, it's relevant to you. Because if you've made a loss in crypto, you can use that, in effect, to generate free money. How? Okay. Let's discuss this. And I'll give you an example. In capital gains, when you make a loss, well, not in all, capital is a very complex scenario. But let's talk about crypto. Let's say you got 2 different cryptocurrencies, or let's say 1, and you made a loss in 1 year. But in the following year, or the year after that, or the year after that, you made a profit. Maybe 10 years down the road, you made a profit. If you have notified HMRC of that loss, let's say you made a £20,000 loss. I mean, you went crazy in your first year. Your head got filled from all those YouTube influencers that you're going to make £1 million out of £1. And you just kept on betting. And you've had the year we've had in crypto, 24, 25. And you really lost a lot of money. Let's say you lost 20 grand. And 10 years down the road, 5 years down the road, you actually made £15,000 in profit. By notifying HMRC of that £20,000 loss, when you did for this year, you would be able to offset that £15,000 profit in a future year, meaning you don't pay any tax. You actually recuperated your £15,000 and in its entirety, free money. And then you have £5,000 to roll over in the future. Now, this is a very extreme example, and nobody wants to lose money, but it's not the end of the road. You can roll it over and settle against future capital gains. So that's why this is very important. I'm going to give you an example. Emma, a leads freelancer, makes $15,000 in gains, but loses $5,000 in meme coin. Let's assume she's a high rate payer. She reports the loss, dropping the taxable gain to $7,000 after £3,000 exemption. Her CGT falls from £2,880 to £1,680 at 24%. £1,200 that she didn't have to pay. Now, how about that? So even in a loss in crypto, keep proper records and report it. And for those people who do not want to report their crypto activities, unless you're really lucky, unless you want the OGs, big whales, you'd have made a loss. Over last year, you would have. And why not report it? I mean, some people have made like £40,000 losses, £100,000. You're just going to let that disappear over the rainbow? And in 2 years' time, when HMRC and all the governments all over the world have crypto well and truly under their control, and you make a profit, what do you do then? You have to pay the tax on all of that profit. So keep that in mind. So 3 hacks. Very simple, very straightforward, very obvious. Keep proper records, the most important one. Take advantage. And by keeping proper records, you will know whether or not you pass the £1,000 threshold. You know, you will never know if you don't keep proper records, because sometimes you trade very casually and money can add up very quickly, and you think that, oh, I have made 1,000, you made 2,000, and then you haven't declared it, and then you get penalized heavily. So keep proper records in all cases. The most important one, take advantage of the 1,000 tax-free allowance if you qualify, and report your losses so you can take advantage and set off against future capital gains. Let's move on. Now, we're in 2025 in the world of AI, where AI is moving extraordinarily rapidly. We cannot ignore AI. I know some people want to, but why would you? It's like horse and carriage and the car. The people who ignored the car, eventually had to buy a car. It just didn't work anymore for horse and carriage. The telephone, the people who thought the telephone was so crazy. So AI is here, and it's here to stay. And in some ways, yes, it's risky, but in other ways, it makes life so much easier and so much more precise and accurate. And I'm lazy. So for me, AI is the way. However, we're going to give you 2 tools that you can use to, if you don't want to do it the manual way, maybe 5% of you might want to, but most of you will want to do it in the easiest, most accurate way possible, that ensures that everything is done on time and you don't have the headache. And I'm going to give you two tools, 2 kinds of tools that will help you do that, depending on your circumstances. The first one is MTD compliant apps. Now, what do I mean by MTD? Making tax digital. In 2026, everybody earning over £50,000 who is not tax at source, like fully as an employee, the only income is an employee, or 95% of the income is an employee, and they don't make over £100,000, on child benefit, etc. But you will have to file a self-assessment, MTD, making tax digital. That'll apply across the board, unless you're under £50,000, okay? But even those under £50,000, you find it increasingly difficult not to use digital software that is HMRC compliant. So basically, in effect, it'll be most people. I will name you 2, I'm not affiliates, but I'll name you 2 bits of software that I think will help you do that job. Now, when would I use that software? I would use that software if I have different kinds of income, like rental income, self-employment income, as well as crypto. So, as well as employment income. So there's a panacea of different income sources that need to be pulled into one. And these softwares also AI enabled, cutting edge technology, and we've all heard the names. They are Free Agent and QuickBooks. And what they'll do is they will draw the information in, and they will sync the trades within the software so that you can have a holistic tax return that can be submitted to the government. They will do the calculations for you. So you wouldn't have to have that spreadsheet. And spreadsheets can be a real pain. Save the spreadsheet gets corrupted. But some people love their spreadsheets. It's up to them. So that's very important. And remember this golden rule. HMRC's Crackdown plus fintech / blockchain equals compliance and savings. HMRC Crackdown plus fintech / blockchain equals compliance and savings, saving you from penalties. 60% of people, 70% of people get penalties, but not you, because you've listened to this podcast. I'll give you a use case and I'll read it out for you. Tom, a Glasgow crypto trader, uses Free Agent to log £30,000 in Bitcoin. Let's assume he's a higher rate taxpayer. It calculates a 6,480 CGT bill at 24% on 27,000 out of £3,000 exemption. And he files it. Without it, deliberate non-compliance, let's say, he lost track, or, he forgot, and or he deliberately avoid, he added on these different chains that are KYC, and you thought, I'm cool. But let's say they caught up with him, and they thought it was deliberate. And they thought it was so deliberate that they had to teach him a lesson. They could have raised a £100 penalty on him. That's £6,480, exactly his gain that they've determined, plus £2,000. That's £8,500 in total on a gain of 6,400 on a tax of 6,480. So that's 6,480 plus 8,480 plus 2,000. That's almost £17,000 you'd have to pay now if you hit the wrong HMRC officer. Now you tell me, is it worth it at that point? On a gain of 27,000, on a gain of 30,000, you'll have to pay 17,000. You'd be left only 10. And all he had, and all Tom has done now, he said, look, I'm not going to take that chance. I'm going to use an MTD compliance app because I've got self-employment income, I've got other income. All in that, you're going to use Free Agent. It's going to do a calculation for me automatically. It's going to track my trades. It's going to file. That's it. And the story. I have nothing to worry about. So that's tool one. Tool two, blockchain analytical tool. And this is the one I favor. I mean, let's say I had self-employment income, other sources of income, hypothetically, which you don't. I would still use the blockchain analytical tools because they're specialized tools. They're highly specialized tools, and you could get APIs to link in with the QuickBooks, or you could get reports from them that you can just type in the result in QuickBooks, or your accountant can do it. But they're very precise tools. These blockchain analytical tools, and if it's only crypto that you are dealing with, they can file straight to the government, straight to HMRC. You don't even have to worry. And these tools are amazing. And I think Coinoly is considered to be the real gold standard. And let's use a use case, particularly about Coinoly. So we have CoinTracker and Coinoly that track wallets and flag taxable events. They're GDPR compliant. So they track wallets, they flag taxable events, and that's what you want to do. You don't want to have the headache of determining a taxable event. The software will do that for you. All you have to do is connect it to your various wallets. Now, if you have connected to some wallets, not all, obviously your tax will not be right. And if HMRC finds out, you'll have a problem. So at least, if you want it to be 100% right, you connect it to all your wallets, and it'll do the work for you. Here's a use case. Lisa, a Cardiff SME owner, uses Coinoly for £50,000 in NFT sales. NFT gains. She's made gains. It shows 11,280 CGT. That's 24% on 47,000 out of £3,000 exemption, assuming she's a high taxpayer, avoiding a £2,256 penalty, because Lisa is not stupid. She's not trying to, she understands that this is 2025. And HMRC knows about AI, and there's something called HMRC AI, and it's very advanced, and they've got limitless funds to spend on it and to train people on it, and they've had 5,500 new tax investigators, a lot of them focusing on crypto, and the government has given them, by law, incredible powers to investigate crypto because they believe crypto is the cause, or one of the main causes of that huge gap. So she's sensible. It's better to give the man something rather than try and give him nothing, and then you end up paying everything. So that's Lisa. She's a smart lady. In conclusion, and let's wrap this up. TaxShredder fam, it's been great speaking to you. I hope to see you again, and we hope to do one podcast a day. I mean, that's the aim. It probably won't start that way, but we'll try to build up to that. It won't always be, we'll have one day a week for tax specific matters, and we'll have different, because this is not just about tax. This is about business, politics, finance, entrepreneurship, which countries in the world have the best tax system, how you can emigrate there if you want, how people can invest in the UK in the most efficient way. It's a panacea, because the theory is that you cannot truly become wealthy if you do not master tax code in an optimal manner. And many of the wealthiest people who make fantastic gains, are people who focus on tax regulation and are able to spot opportunities and be there first as the tax regulation unfolds, because there'll always be opportunities, no matter what the tax regulation is, to make great sums of money legally, efficiently, and rapidly. You just have to be sensible. So HMRC's crypto tax crackdown in 25-26 is a very serious matter, but you have the playbook now. You need to keep killer records. Remember that. Either manually, through MTT compliance software, or blockchain applications, which I favor. You need to keep killer records. Without that, you got nothing. Keep killer records. Use that 1,000 trade allowance if it applies to you. And the only way you can know that is by keeping killer records, right? Take advantage of offsetting tax losses in case that I can't imagine anybody, maybe 95% of people who've traded, invested in altcoins in 24, 25 so far have made losses, unless you're extremely lucky or extremely good, or you're a whale, people who determine the markets and manipulate it. But 95% of you would have made losses. And that's the statistics. And take advantage. You made a loss. When you make a gain, offset those loss against those gain. Don't throw it away. And lean on fintech like Free Agent Coinoly to stay compliant and save big. Finally, thank you for listening. This is my first podcast, my first ever podcast. So please be gentle with me. Don't judge me too harshly. I'll try to get better as time goes on. It's been a wonderful experience. I didn't believe I could do it, and it's been joyful. Please subscribe to our TaxShredder weekly newsletter for exclusive 25-26 strategies. Email taxshredder@taxshredder.co.uk for free consultation. The link will be in the description. Smash that like button, please. Share with your hustle crew, and let's stack cash in 25-26. Thank you very much. We're over and out.